So I hope you guys are doing well. What's up, everyone? Good morning, good afternoon, good evening, from wherever you are, guys. It's your boy Michelle again, and welcome back to our Test the Trends live sessions, right? So right now we are having three signals, right? We're having three signals going live. Before I show you the breakdown of yesterday's trades, we have three live uh, currently running signals, right? We have the first one that we took was on what was on gold right here, and the second one was GBP USD, right, and the third one it is what which is AUD. So the breakdown. I'm just going to show you the analysis of what caused us to take this end, right? It's just all the analysis, right, of these two, right? GBP USD, as we can see, we have a clear downtrend here. 4 hour, 1 hour, 30 minutes, clear downtrend, right? We have a clear downtrend. And now we are making a retest of the what of the neckline. We can see chart pattern, left shoulder, head, and also what right a chart pattern. And we're retesting the neckline but after a long time, but a retest, and it is what it is very effective. So we have a break and retest of the what of the head and shoulders pattern, right? Which is a what a reversal pattern downtrend. I always tell you guys, there's nothing more pleasing than seeing a, a retest, right? There's nothing more pleasing than seeing a double bottom in an uptrend, right? Or seeing a double top in a downtrend, or seeing a head and shoulders pattern in a downtrend, or in inverted head and shoulders in an uptrend. It is just it is just so pleasing, guys. It yes, uh, you have confidence in that trade, right? So if this trade is a stop loss hit, it's all well and good because everything is according to our plan. As you all know, guys, I always take my trades according to what to five conditions. Right? I look at condition number one. I look at entry. Right? First of all, I look at entry. Right? The entry is the last one. First of all, I look at trend. Right? The trend is the first one which I look at, and trend is determined by our what our exponential moving averages. I use only the 21 exponential moving average and the 50 moving average, right? Which is represented by emojis. If you see the 4 hour facing upward, right, it just shows you that the the 21 moving average, right, was above the 50 moving average, which means the slower moving average was below the faster moving average. For this to be clear, let me just show you what the moving averages are there. After I see this, right, I usually remove them to make my chart what to make my chart cleaner, right? So I remove them to make the chart clean. So let me just show you what I mean. If I move my chart to the 4 hour time, see that the green moving average is above the what red moving average. The red moving average is the 50 EMA, and the green moving average is the what is the 21 EMA, which is the what faster moving average, and this one being the what the slower moving average. Right. When a slower moving average is below what a faster moving average, it shows a what a potential upward momentum, right? But going now in the 1 hour, the slower moving average was now at above the faster moving average. Potential what a potential downward momentum, and same applies in the 30 minutes, right? It is showing a potential what downward momentum. So this is how I detect my bias, or let's say a daily bias for a particular session, right? After that, I can either draw trend lines or draw market strike, right? So consider, right, we have everything in place here, right? We have our areas of interest. Areas of interest, they can be support as well as the resistance, right? And they can also be what the value gap, right? Right now, we are retesting a neckline of a what of a head and shoulders as well as right. So I have my what optimum trading zone well covered. So I have my trend and my optimum trading zone, right? What what I need is an additional confluence. An additional confluence is the chart pattern which we already covered, and the what an entry signal. We had our entry signal right here. Although we entered here because we were late to come on the chart, but our entry signal was this bearish engulfing candle, right? Which small bullish candle, right? And moving on to the other chart, right? AUDJPY. So on our signal on AUDJPY is the same thing. Right now, we are now looking at that 1 hour fair value gap, right? We have a fair value gap right here in the 1 hour. That is our area of interest. So let me just draw it. It can be seen, but when you're now having a long time in this, whilst you're executing these things, right? You will now be used to it. You just see it even if without it. You just see it clearly once you are uh, browsing through your time frames. So in the 1 hour time frame, we have a fair value gap which is being retested. So first of all, I'm looking at trend. Do I have my trend? I do not even need to redraw these emojis to show you guys that in the 4 hours, 1 hour and 30 minutes, there's an uptrend according to our exponential moving averages. There's a upward bias. So to just show you guys, right, we are seeing in the 4 hour, the red one is below the green one, which shows what an uptrend. In the 1 hour, the red one is also below the green one, show a potential upward momentum. In the 30 minutes is the same thing. So this move has a high potential of going upward than downward. I have my session bias. After that, what do I need after my trend? I have my optimum trading zone. Who can tell us what optimum trading zone I was using? Can somebody tell me what optimum trading zone I was using? Guys, are you even listening? But are you seeing my chart? Proud. What optimum trading zone did I use here? The fair value gap. Yes, we have a fair value gap. And let me just delete this one. Alright, we have a fair value gap. What else do we also have here? Very good, excellent. We also have a retest of a psychological level. It is coinciding with the with the fair value gap. So we have two confluences, right? We have a fair value gap and a what? A psychological level. As we all know, I draw my psychological levels on current space after every 50 pips, and on gold, I now draw them after every 500 pips because it is moving very volatile nowadays. So we have, if I am to draw the chart pattern as it is, right, just retracing as it is, right here, right here. If we have a clear what, we have a clear market structure, right? We are continuously making what, higher highs and higher lows. This low is higher than this low. This high is higher than this high, than this high. And if I am to draw just a small square right around here, we can what, a break and retest structure, right? I just drew the chart as it is. I just traced as it, right, and then just moved it aside. So this is what we are having, right? We had our trend, we had our optimal trading zone or our area of interest. Now we also have what, our additional confluence, which is the what, the break and retest. After additional confluence, what did I want? I wanted what, my entry signal. My entry signal I had it in the 15 minutes, which is what, just as soon as this pin bar closed, we entered right here. So this is the analysis of the trades we are taking live right now. Now we are going to break down of the trades that were taken what, yesterday and the whole week, because the whole week I was busy. I did not have time to show you what was going on through. So let me just show you guys that I'm in this trade, right? I'm in this trade. You can see GBP USD and also what, AUD JPY. I'm in this trade, right? I might have entered late, but let me just put my stop loss to secure my position right here, and also put a stop loss right here. Take profit, I don't care because we are having a live session, so I'll be monitoring this chart. When I'm seeing rejections or when I'm seeing my point of exit, I'll just what, I'll just come and close it manually like so. So this is it, right? As you can see, guys, I now have a new account. It's because the competition account in what, in in the competition for April, it finished. So the account automatically, it won't, it will no more it will no more be working. So now we are moving on to what, we are moving on to the analysis for yesterday. The trades we had yesterday. This trade needed a bit of tennis size. This trade was painful. We had everything with our uptrend, right? According to our, I'm going to retrace them so that we can save much time. We had our EMAs, which had our what? Our session bias, right? And then we had our what? We also had our area of interest or optimum trading zone. This trade, we took it in the what? 5 minutes. That's where we took it. We took it at exactly this point, right? That's where we took it. So what happened with this trade is that as soon as I saw this pin bar and the trade was here, I didn't want to enter at this level because I knew that it would be expensive for me. I just told you, as we also on the signals I gave, right? I told you to take a what? To place a buy limit, right? I told you to place a buy limit on because I didn't want us to what? To buy at that expensive position. And if we had bought at that expensive position, you see that would have taken a what, would have taken a massive loss right here. So When I saw this pin bar, right, I told you to place buy orders right at this level. Why? Because I had an anticipation that it will come and retest, right, going back up just like it did here. As you can see at this area, it just retested the entry and just started going up, right, without giving a second confirmation. So that's what I was afraid of. So this trade now was not a five-star trade. As you all know, I rank my trades, right? If it has everything up to exit, it will be what? Five-star. This one had a good trend, a good area of interest, right? It also had a good exit and a good what? Additional confluence, but it did not have a good entry because at the point now where we when we were taken into this trend, right, there was a bearish engulfing candle. All the directions they were facing downward, right? All directions were facing downward with this at this level. So it did not make sense, but we were already in, so we just left it to that. Anyways, going further, this was a what? Was we had everything except for the what? For the entry signal. Right now, go to USD JPY. USD JPY. Yesterday we entered USD card, not USD JPY. We are going to USD card. Now, as you can see, let me just go on Chrome so that you guys can see we covered chart patterns on our series, if I'm correct. So for you to understand, let me just go on what? On Chrome so that you can what? I can show you what I'm talking about, right? Ascending channel. Now, I've traded these many times, right? As additional confluence. I've traded this many times. It is basic knowledge or it is general knowledge that every time when we have an ascending channel, right, the channel always, the price always breaks to the downward side, right? As you can see on this image, we had an ascending channel right here. We had an ascending channel right here. And what? The trade broke to the downside. Every time they will be giving us what? They can even give you that your take profit and what? Stop loss will be at this level. So using this general knowledge, right? This is how I entered this trade. This is how I entered this trade. As you can see, we have our right. After this support level, 15 minutes, we had a strong timber. If I am to zoom in my chart so that you can see clearly, this is this is a gravestone dodge. You don't even need to put the measuring tool to see that this on this candle, the body is 38% or less more than the whole candle. The more percentage are on the what on the wicks of the candle. So having a gravestone dodge on this what support level, I I anticipated the what I anticipated a break and retest. I did not I did I did not want the whole move like to capture the whole 1:3. Maybe it would retest, right? Respecting the channel, going back to this level, start making rejections. We were okay with that because it would be approximately 1:2, and that's what we target every time. We target a minimum of what? Of 1:2. So this is just it, guys. This is how the markets do their thing. Sometimes they are correct, sometimes they're just completely wrong. were just completely wrong that this channel was going to make a, what, a reversal, because we are seeing a channel, right? Whilst we are in downtrend, a reversal trend which shows a downtrend. Whilst we are in a what, in a downtrend, there's no other confirmation you would like. It's just like seeing a head and shoulders pattern whilst we are in a downtrend. So we had everything. And our trend was the what, the the session buyers, right? Our EMAs, right? And we also have a market structure, right? Continuously making what, lower highs, lower highs, lower highs, making lower highs, right? And we also had our area of interest. What was our area of interest? It was a what? A 1 hour. It was a 4 hour fair value gap, if I'm not mistaken. It was a 4 hour fair value gap, if I'm not mistaken. Let me just here where we're in the 4 hours. Okay, it's not showing here. Let's just open on this. Yeah, it was a 4 hour fair value gap. So we're retesting a 4 hour fair value gap right here. Right. Once we are retesting a 4 hour fair value gap, we also had the what, a channel. So our fair value gap was our what, our area of interest. Then our additional confluence was an ascending channel. Pin bar, entry signal, everything good. This was a, because it had what, everything, and the exit was according to plan. It was not manipulated. They did not adjust the stop loss or the take profit or anything. So just going here, I just want to show you guys how you should do your things, right? Record on every trade. Record on every trade. Record why you take those entries. I right on a trade using screenshots, because the moment I click a screenshot, I know why I took that trade. The moment I put a what, a screenshot, I know why I took that trade. So these were my positions yesterday. As I told you, I'm trading a new 15K account. You can see that the one which had the profit is a four-star trade. Why? Because we did not have an entry signal. Exit was according to plan. That's good. Trend was we had a trending market. We had our optimum trading zone, and we also had our what, additional confluence. But we did not have an entry signal. So this is a four-star trade. This is a five-star trade. Why? Because we had everything, and we did not manipulate what, the exit. So this is how you should record your journal. You should journalize everything. But if you also see scientists when they are making experiments, right? When they are testing their experiments, whenever you are testing a new strategy, you should always journalize, right? So that you can see the consistency of what, of the results that you are having. So continuing, we also have the what? We also have trades which we had on Tuesday, Tuesday and Monday, right? On Monday we had gold. We are just going in time here. On Monday we had gold. We did not have time to what? To do the trade breakdown for this trade. I remember telling you guys that objections, we might not gain our 1:3. So put take profit on 1 is to what? 1 is to 2. And it just hit that position. Guys, this is just once in a while. This is just coincidence. This is just one time luck that where I put my take profit is where the market reverses. It's not because I know. It's not because I know. It is it is just once in a life, once in a while that these things just what that these things just happen. So we had everything also on what on our position on gold demand. We had our what downtrend. We had all three of them is different from this position when the 4 hour they were still showing an upward direction, but the 1 hour this time the 4 hour had already corrected. This is why I told you guys you should use what the 21 and 50 EMA, 100 and what and 200. It's for someone who is trading the bigger time frames. While you are entering in the 5 minutes or in the 15 minutes, the move would have already gone. By the time the 200 EMA corrects its direction, the move you wanted to capture in 5 minutes or in 15 minutes, people would have already taken their TPs and gotten out of the market. Also, you're just what? Also, you're just still waiting for the EMA to what? To correct itself. That's why I mainly consider the what 1 hour and 30 minutes. But the 4 hour, it is what it is for boosting confidence. Right here we have our left shoulder, head, and also what this is an additional confluence. Can you guys tell? Can you guys tell me what optimal when I was hearing you? Can you hear me, guys? Hello, am I seeing it? Okay. On this thread, exactly. We have a psychological level being used as a what? As a resistance. This is excellent. And now let's move to other time frames. Right? Let's just move to other time frames. Let's just move to other time frames and look on that trade and look on that trade again. Also in what? In other time frames. Right. So can you guys see also what was being retested here? Can you see? We have a fair value gap here. Can you see that? A bearish fair value gap. So at this point, we're having two. It's not necessary to have two, but I'm just saying you can see that if this trade is hit stop loss, it is all well and good because you know that you did not gamble. You executed everything according to plan. You had a lot of confluences, but the market did not just play out because there will be manipulation and it's also because that's how the system is. You need to have losses, right? So you can see that this one it played excellent. We are retesting the 1 hour fair value gap, and we are also retesting the psychological level. And I told you on board my psychological level after every 500 pips, which shows how much strength they have, right? How much manipulation they have in the market. So this was our area of interest, psychologically titled us, right? And We also had our fair value gap in the 1 hour. Now for our entry signal, who can tell us what entry signal we used here before we close this one? What was the entry signal? I told you entry signal, I use candlestick anatomy. What what did you say, Proud? Yes, we have a pin bar, right? We have a pin bar. We have more of a cross candle right here. And did you see candlestick that were confirming a downward momentum? We have a pin bar right here, right? And do you see that this is also a pin bar and a bearish engulfing candle? Yeah, it is engulfing because this is not a bearish candle. It's a small bullish candle. So this is a bearish engulfing candle, engulfing one, two, three, engulfing three candles before it, five candles before it. All these candles were engulfed by what a very good bearish momentum. So guys, let's just have a 10 minutes break, and after the 10 minutes break, Itai, our other analyst, will show us on the trades uh, that he was analyzing on indices, because I only focus on gold and current pairs. But when you see signals on indices, they'll be sent by Itai, so he needs to explain his own charts. So I'm just going to stop this share and we'll resume in about 5 to 10 minutes. So stay tuned, guys. Stay tuned. It's alright, bro. Waiting for you. It's alright. Can you share? Okay. Yeah, it's okay. When you want to follow a trend, it depends on the time frame you are entering. You cannot follow a 1 week trend when you enter maybe 15 minutes or 5 minutes. Are we together? So in this case, right, we trade 15 minutes and what and 5 minutes. Let me just share my screen. You can see right here what I'm saying. Right. Okay. So let's say um, 4 hour, 4 hour, hour, 30 minutes, right? And let's say maybe end day, or some people like to analyze the 1 day time frame. If you are an intraday trader or a swing trader, most probably are entering your positions in the 1 hour or 30 minutes. Am I correct? So you cannot depend on the 4 hour, 1 hour and 30 minutes to enter your 1 hour or 30 minutes positions. You are going to be using what 4 hour and daily time frame, right? But you also look at the what weekly time frames. Why am I saying that? We only look at the 4 hour EMAs so that we don't bump into resistances or into. Do you know we have an EMA retest? EMAs are trend lines, but they are dynamic trend lines, right? You know, when we have a trend line, we enter on a retest of a trend line. So we want to avoid those 4 hour EMA retests or 4 hour uh, resistance levels and key levels in the what in the time frames that affect our what our trading as day traders, right, are only the what 1 hour and 30 minutes. We look for trend mainly in the 1 hour, 1 hour and 30 minutes. So for example, as you as here in the 4 hours, it was saying up, right? 1 hour saying down and 30 minutes down. Because our 1 hour and 30 minutes are going down, we can enter because what are we using? We are using the 15 minutes time frame to end or on the 5 minutes time frame to end. But the moment you are using 30 minutes time frame to enter, if the 1 hour says down and the 4 hour says up, do not enter that trade because they are in contradiction, right? This is what I do. Sometimes it's not always like this. You see it's like this because they are the pairs that I select. But before I select, right, from my 7 pairs, there are some pairs which will be like, let's say for example, it will be 4 hours up, right? 1 hour down, 30 minutes. Also, it is saying also up. Mainly, mainly you see once I've already selected my pairs already. So they have a clear trend, right? My 1 hour and 30 minutes in sync. But before I select in the morning, once I'm seeing pairs, right? Sometimes there are pairs which will be like this. What time frame am I considering to enter? It is 15 minutes, right? Can I enter a upward trade? The 4 hour and 30 minutes are saying up and the 1 hour is saying down. No, I cannot enter because the 1 hour it is a very close time frame to my what to my 15 minutes. Right. So the closest time frames, right, to the time frame you are entering are the ones that you consider. Right. The third one, if it is in your direction, it gives you what a clear picture, right? That the time frame has corrected itself. Like for example, here the 4 hours still saying up, but at this point it was now saying down, showing that it has corrected it's what its direction because whatever you see happening in the bigger time frame, it has already happened in the what in the smaller time frame. So what you choose, right, in terms of EMAs, right? What affects your direction in terms of EMAs with the time frame you enter, right? Let's say I enter in my 30 minutes time frame. I will use the what 1 day, 4 hour, and 1 hour time frame. So let's say the 1 day is going up, right? The 4 hour is going up here, and the 1 hour is going down. On this trade, once I want to enter in the 30 minutes, I won't enter at all. I won't enter at all because these two which are closest to my time frame are in contradiction. But let's say the daily time frame is the one which is saying down. The 4 hour is saying up, and the 1 hour is saying up. We use the psychology that what is happening 4 hour, right? It has more probability of correcting what the daily time frame because the moves that are happening in daily, they are bigger moves, right? They will correct after a long time, right? So this one, if you are someone who is concentrating on trend on, you could even exclude this, right? But it also helps you, especially when all three of them are moving, right? And there's another pair which is only two. Let's say, for example, on gold, we have 4 hour going up, 1 hour down, and 30 minutes down. But then with USD JPY, which all of them are going down. Obviously, I'm going to choose USD JPY because the gold is one which is in what in contradiction with the other two. So this is what we mainly use for the third time frame. It is for avoiding what getting into resistance, right? Avoiding getting into pointless losses, right? Because you'll be getting into a resistance level or a support level. And it is to avoid what the trend line retest of that time frame because it will be very powerful, I tell you. It will be very powerful, the retest of a EMA in a 4 hour, right? Even if the graph is going to go down, it will first take you out and then it will continue going down, right? So, and thirdly, we also use it what to boost the confidence or the confluences of a certain trade, right? It is also an advantage if you trade many pairs like me. When you see that this pair, the bigger time frame is not in what is not in corresponding with the other two time frames I trade, you can just what you can just leave that pay and what go to the next. So this is what we for the 4 hour. Otherwise, we are looking at this what two time frames which are adjacent to the time frame that I'm trading. Is all the questions answered here? Okay. Isa, you can now share. Isa, bro, are you sleeping? Bro, I'm safe. Yes, bro. Yes, we are seeing well.